Welcome to this corporate accounting class. This is problem number 3 in page number S62. We are given with the balance sheets of O Limited and P Limited, and along with some adjustments. All the profits of P Limited has been earned since the shares were acquired by O Limited, but there was a reserve. So at the time of taking over of the subsidiary company, right, at the time of taking over of the company, only reserve was there for 60,000. Profits are earned after the acquisition of the shares. So from this point, we can able to take what is capital profit, what is the revenue profit. So how will you take the capital profit? First, you should know the meaning for capital profit. Capital profit is profit at the time of acquiring the company. Revenue profit means profit after the acquisition of the company. Profit here that refers to both P&L as well as the reserve, right? At the time of acquiring the company, there was a reserve of 60,000. It is given in point number 1. So that is the capital profit. And also it is clearly specified that all the profits of P Limited has been earned since the shares were acquired. Profits are earned after the acquisition of the share, but there was a reserve of 60,000 that we have to take. And another important point, the subsidiary company shares are 40,000 shares. Of that 40,000 share, holding company contributed 35,000 shares. Balance 5,000 shares are contributed by outsiders. We used to take that item as minority. Minority in the sense, meager part of the shares are contributed by the person. Okay, so we have to take the ratio as 35 is to 5. That means 35,000 is to 5,000. That is 7 is to 8, 7 is to 1. We have to take as ratios. Ratio between the holding and the minority. And the capital profit is apportioned based on 7 by 8 and 1 by 8. That is, capital profit should be apportioned between holding and the subsidiary. Okay, then net profit. What is net profit? What is the meaning for net profit? The amount of profit earned after taking over of the company, subsidiary company. Here in the balance sheet, it is given as P&L account as 2,40,000, reserve as 1,20,000. Total amount is 3,60,000, of which, as per the condition, we have taken capital profit as 60,000. Balance is what? It is revenue profit. Okay, that revenue profit is apportioned now in the ratio between holding and the minority as 7 is to 1. Accordingly, I have also apportioned that amount. Then next point what we have to do is calculation of the goodwill. What is the format for calculation of goodwill? Amount of investment minus face value of the share minus share capital, capital profit, share of capital profit. Amount of investment, it is given in asset side of the balance sheet. It is 35,000 shares in P Limited. It is given in O Limited column. 3,50,000. That is the amount of investment. Then, what is the face value? 35,000 is contributed by the holding company. So, 35,000 in the rate of 10 rupees. So, 3,50,000. Share of capital profit alone, we have to take it here. Why? Because net profit is taken. Net profit, sorry, not the net profit, I am sorry. Revenue profit should be earned after acquisition of the shares. Okay, so here we have to take only the capital profit. So holding company share of capital profit is 52,500. Already we apportioned working note number 1. And another one is, in this case we are given with the condition that you please refer condition number 3. Sundry assets of P Limited are undervalued. What is that undervalued? Here, less valued the assets. Okay, now we have to adjust that. How to adjust that amount? Amount of undervaluation, that should also be apportioned between the holding and the minority. Okay, the share of a holding portion is taken for the computation of the goodwill as well as the minority, right? So share of undervaluation, for this one that comes to 17,500, total amount is 20,000, that is apportioned, that 20,000 is apportioned based on 7 is to 1. So here the amount comes to 17,500, amount of final balance of capital goodwill, it comes to minus 70,000. Please mind it carefully. The amount of goodwill that comes to the 3 lakh 50 minus the face value 3 lakh 50 minus the share capital profit, share of capital profit 52,500 minus undervaluation of the share, undervaluation of capital, sorry, again I'm sorry, undervaluation of the assets, that comes to 17,500. Balance is minus 70,000, so it is taken as capital reserve. Then next working is the unrealized profit. What is that unrealized profit? When you are sending the goods to outsider, normally it is attached with the profit. Whereas if you are sending the materials to within your company or within the group company, within the branch, okay, to your branch, between the group company, then it should be based on cost value. Suppose if you send the material between the branch also with the sales price, that amount of profit, because whenever if you are taking the sale, it is attached with the profit normally, that amount of profit should be eliminated. How will you take that amount of profit? Here we are given it as a condition. Stock of O Limited includes 50,000 brought from P Limited at a profit of 25% on cost of P Limited. So the total value of the goods sent is 50,000. You are attaching the profit as 25% profit on cost. Okay, it is given as 20, clearly it is given in the question. 25% you take point number D, 25% profit on cost. So if you are having the profit on cost, it should be converted into profit on sale. Why we have to convert? Because normally we have the materials with the cost price. Sale price is only that with the customer. So here we have to say, convert that amount of profit on cost as profit on sale. How will you convert this? Profit 25% profit. So 25 divided by, the formula is percentage divided by 100 plus percent. So here 25% divided by 25 divided by 100 plus 25. If you simplify that 25%, that comes to 1/5. So 1/4 on cost is converted as 1/5 on sales. Same thing. 25 divided by 100 plus 25. 25 by 125 is nothing but 1/5 on sales. That we have to take. So the total stock value comes to 50,000. On that, if you apply this percentage of a profit on cost converted as profit on sales, if you apply that, that comes to value comes to 10,000. What we have to do with that 10,000? That amount of 10,000 is profit on unrealized stock. Okay, that profit on unrealized stock. That amount of profit of 10,000 should be deducted from, in liability side from P&L account, and in asset side it should be deducted from the stock value. Why? Because this stock is not sold out, this is transferred to the group company, but wrongly it is attached with the profit. That's why we are adjusting. Profit should also be deducted and stock value should also be deducted. Okay, then next one is, what is the minority interest? What the amount of minority interest we have to show. Face value, total shares is 40,000. Share contributed by the holding company is 35,000. Balance of a share is contributed by the minority, that is others. That comes to 5,000 shares. And plus share of capital profit. What we ascertain the share of capital profit in the first working note, 60,000 into 1/8. That we have to take. Then share of revenue profit. Then take working note number 2. The 3 lakh into 1 by 8. The amount of revenue profit for minority interest, that comes to 37,500. Okay, then your shares are undervalued. One part you apportioned and taken for the goodwill calculation, and another one part apportioned and taken for minority 2,500. Total amount comes to 97,500. So in this way, when you are given with the profit on unrealized stock, and if you are having that, what is that? If you are uh, having the revaluation of the assets, both the things should be treated. Then finally, we have to prepare the balance sheet. Mind it carefully. When you are preparing the balance sheet, you will have to apply these adjustments. Number one, all other things are similar. What the assets and liabilities given in the question, we have to take, except share capital of subsidiary company, that should not be taken for the new balance sheet, and investments given in holding company column, asset side of the balance sheet, that should also be not taken. Why? Because the investment is, that value of the shares is adjusted and considered as goodwill, taken for the computation of goodwill. And investment, share capital of a subsidiary company, that should not be taken, because that is also taken, apportioned, splitted into shares for minority, shares for holding for the purpose of goodwill, we have taken. Then next item is, we have to take that unrealized profit. Unrealized profit on stock, one effect should be in deducted from P&L account, another one effect should be deducted from stock value. Third item we have to take is undervaluation of the stock, undervaluation of the assets, that should also be adjusted with the new balance sheet, in the new balance sheet. Okay, and minority interest we have calculated. That amount of minority interest, that is 97,500, should be shown in liability side of the balance sheet. Minority interest always, that should be in liability side of the balance sheet. Then capital reserve we calculated 70,000. We calculated for, we made the workings for the purpose of computing the goodwill, but that comes to minus 70,000, so it is a capital reserve. Where you will take the capital reserve? Capital reserve should be in liability side of the balance sheet. Okay, so in this, finally your balance sheet is supposed to be tallied. In this way we have to solve the problem. This is the opt one for essay type question for part C.